What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 13th of 2019. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we've got to spend some time to talk about a very severe topic going on in emerging markets. The second largest country in South America, Argentina, finding itself yet again in panic with an over 30% drop in stocks across the board, as well as a 20% drop overnight. And it's already hyperinflated currency, the worst hyperinflation and devaluation we've seen out of any currency this year. So I want to spend some time to talk about what happened to a rough degree, so you have some understanding. I don't know the whole case, to be fair, but along with that, to talk about what this means for the broader economy. All right. Let's go ahead and dive into it right after our quick sponsor. Our sponsor for this episode is Travala.com. Now, for those of you out there who are planning your next trip for either work or leisure, I highly recommend you check out Travala.com to place your next hotel booking. They not only provide a wide range of selections for places to stay along your travels, but also can provide upwards of 15 to 40% in discounts compared to other leading rates on booking websites. And to top it all off, you can use Bitcoin, Litecoin, XRP, and a basket of other cryptocurrencies to place your next booking. So if you want to learn more about Travala.com, check out the link down below in the description to find out more. Alrighty, everyone, so let's go ahead and run through the market real quick, and then we'll dive into this very important macro topic. If we take a look across the board for cryptocurrencies, most cryptocurrencies in the red at the moment, but again, most in general no trend scenario, as Bitcoin has been pushing sideways. If we take a look here at global charts, again, market cap slowly just tethering off here, nothing too severe. We've been pushing sideways, and I think in hopes, in this case, of Bitcoin breaking past the line of resistance, which we'll take a look at in just a moment. Bitcoin dominance slightly down from its highs the other day, but again, no serious trend change. So we take a look here at our chart here. We've got the Fibonacci fan. We've also got a line of resistance, and it seems like it's building between one of the support lines on the Fibonacci fan as well as the line of resistance here. It looks like we're going to be coiling in here and possibly getting a breakout or a breakdown to one of these lower levels that we're watching, and maybe might even retest down to the 200-day moving average. If we do get that, kind of sideways price action and that eventual correction down to the 200-day, I'm going to be averaging in pretty heavily there. So I'd recommend, continuing to prepare a cash position if you guys can. In this case, well, again, I don't want to recommend anything specifically, you guys. But if you guys are looking to add in, my personal thesis is I'm going to keep averaging, adding in cash in this case. And if we do get a breakout above here, above 12,000, I'll add in that case. If not, if it rolls back over, I'll add in at one of the lower moving averages like the 200-day. All right, so we've got to talk about this macro topic, guys, because it holds a lot of relevancy to crypto. In fact, as I kind of hinted to earlier, we're going to be talking about Argentina. And just to show you how significant this is, on South American exchanges, predominantly ones used in Argentina, the premium for Bitcoin was over $1,000 the other night. So I think this does hold some relevancy here in the sense of those of you who just care about crypto. And it's why I recommend you guys learn about the macro topics. Now, if we take a look across the board for global markets, fear has really kind of taken over this week. As markets have started to roll over again. This is not only in Argentina that we're going to be talking about, but it's in India, it's in Hong Kong, it's in a lot of European markets such as Sweden and Germany, as well as in Asia, as well in Japan and Korea as well. So you just see across the board, Taiwan, all these countries facing downward momentum across the board. There's a global fear going on right now. U.S. markets down a little bit right now, nothing too significant. Again, it's still looking like the safe haven, but I don't want to talk about U.S. markets. Don't want to talk about the 1% to 2% declines that we're seeing across the market. I want to talk about what happened yesterday. This is the S&P Merval Argentina Index. So this is one of the major 2 or 3 indexes that track Argentinian stocks, and it had a major sell-off yesterday after a shocking election result. Now, I'll talk a little bit about that later on. I'll be fair with you guys. As I'm not an Argentinian citizen, and there's so many governments across the world, I appreciate that people learn about U.S. government and U.S. politics. I kind of admire it in a sense, but at the same time, I don't know enough to talk about this. I've read through it. It's basically there was a primary result. So in the United States, we have primaries as well, but this primary result shows a lot of significance in the sense that it shocked people about who's going to be the next leader in Argentina, and a lot of people were not expecting this. They were expecting the complete opposite. And this supposedly, according to markets, makes things worse. It led the currency dropping 20%, and it led the average majority of stock indices to drop pretty much 30 to 33%. So this is really significant. Now, to some people, as significant as this daily move might be, many people might say that, Nick, this isn't a big deal. We have to have corrections. And it brought us back down to where we were a year ago in Argentina markets. But that's not the case, because this chart right here, this index, is not factoring in for the devaluation of currency. And again, as I mentioned at the end of the beginning of the video, Argentina has seen one of the worst currency devaluations this year. And take a look at what happens when we go ahead here and we multiply the chart here by the value of the currency. And I'll go ahead and take it to the weekly chart here. So I don't know why there's some huge drop here in the chart here, but I really just want to emphasize what this means, because this is all we really need in the sense of price. This drop and the continued drop that we've had throughout 2018, what would appear as an uptrend if you looked at it on the chart, has brought us back down to levels not seen in 2013. And this isn't an emerging market, guys. This is a market that, its underlying economy has so much potential and so many great people. And just like that, a currency crisis, rampant inflation, devalues all that great wealth in an instant. Now, Argentina has done this before. I don't want to make it sound like it's the Argentinian people. It's the monetary policy. It's the management, the failure of government and central banks to manage monetary policy. And sometimes as well, I don't really know specifically about any cases in Argentina. You always have to factor in, if you guys have ever read The Economic Hitman, really good book if you haven't read it, basically talking about how how the IMF and the credit sector have basically squeezed, and the corporate sector as well, and contracting companies basically squeeze emerging markets. And I don't know if that's the case in Argentina. I wouldn't have much of a doubt if it was. But Argentina's been through this before. I mean, the last decade, we've seen inflation rates just continue to stack up, but we've seen much worse cases in the past, where the Argentina inflation rate has gone up dramatically back during somewhere between, I think, the late 80s and the early 90s. So again, this is repeat. This has happened in Argentina before. And if this is just the shock response of a primary, I'm curious about what happens when that individual gets elected, what happens when they actually start implementing policy. I'm still very confused with this. This is basically just the opponent of Marcia in this case, basically in the primary, getting a much larger amount of support than was originally predicted, enough to where people are confident on the election results. So again, it's very interesting to see something like this. I think it shows how fragile the economy has been and stuff. The IMF has tried to intervene. It didn't work. We're just getting to this point now where I think Argentina is going to have to go through a hard reset, and that could be through debt restructuring. It could be through a massive setback in the printing of new currency, or having to issue a new currency as a swap for the previous currency. Who knows? I don't know personally, but I want to take the time, because I know there are a lot of people out there who watch the channel from different regions of the world outside the United States. If you're in Argentina, if you're in an area that's similar to Argentina, you're getting hit by currency devaluation, where if you really relate to cryptocurrencies and what this is all about, I feel for you. I mean, this is the stuff that really kind of like bums me out. It makes me upset. It makes me kind of fired up to see cryptocurrencies go mainstream, because in the United States, we just don't understand this. Like, most people don't. I do, though. I understand just how tragic this could be, because when your purchasing power drops 20% in a day, you can no longer store your wealth in that currency. And the sad thing is if you were storing your value in that currency, you have no say in whether or not that was right and wrong, and if you'd like to pull out to another currency. You can go exchange it after you lost 20% and after it's been the most devalued currency in the world this year. I mean, it's just tragic. This is Venezuela 2.0. And it's just finally starting to show and materialize, I think, because of the significant drop that we had. But this has been at play all throughout 2018 and 2019. And it's the inevitable end of hyperinflating currency. It's the inevitable end when you devalue the purchasing power of everyday citizens and objectives of short-term growth, credit stimulation, whatever it may be. It's not right. And this is why we need something like Bitcoin. The effects of something that's deflationary will never match something like this. And it's always the risk you take on when you give a select group of people the ability to manage monetary policy, who time and time again have proven they can't manage that monetary policy. So, anyways, enough rambling from me, guys. To all you in Venezuela, in Argentina and in Venezuela and other areas across the world that are affected by this, I wish you all the best. And I hope we're going to start seeing more countries take on the foot of New Zealand, who, by the way, just look towards, saying that they are going to possibly, go down to 1% interest rates and probably down to 0 or negative, just finally became the first country to legalize payments of salaries in crypto. So I hope that more people can start to get paid in crypto and have that option if they so choose. It'd be really, really important. And another important thing to take into mind, guys, the main yield curve in this case has nearly inverted as the 10-year yield tops the 2-year rate by just 3 basis points. So let me kind of put this in perspective. Treasury yields. What does this mean? It's basically meaning in this case that if you're exposing yourself to a 10-year treasury from the government, the U.S. government in this case, one of the strongest governments we have right now when it comes to bond yields, as crazy as that is, 1-2%. Well, it basically means that you're getting paid just 3 basis points higher, 0.03% higher, and an interest rate on an annual basis for holding a treasury note that will mature 8 years later than a 2-year treasury. It's pretty crazy. This is a good telltale sign that we're towards a recession, guys. This is the inversion of the yield curve, right? So we need to be very careful here, as yields not only are dropping like a rock here in August, I mean, just serious, substantial drops here in treasury notes, but along with that, the potential for these to continue through the inverted yield curve, and then also, I think a fear that people have if the Fed keeps cutting rates is if this goes towards, 0 and possibly towards negative. If the United States went that low over the next few months in their treasury yields, that would be extremely concerning. I think it would prove that the bond market is ready for an absolute implosion. We've already got $15 trillion in negative yielding debt. We don't need any more, but we're going to get more. It's coming. And I think we can see, again, as we've talked about, the fear being reflected in markets. The market's about to open up here in about 3 minutes, but yesterday, across the board, Dow Jones, NASDAQ, S&P 500, all down 1% or more, around 1 to 1.5% down, looking like we're dead cat bouncing off these levels. And across the indices, from the Dow Jones to the S&P 500, as well as to the NASDAQ, it looks like we're possibly going to roll back down below this support and really start to move to the downside. That is, if we can't hold here over the next few hours. Futures aren't down too much. We'll see. But I want to remind people, again, this is why I'm a swing trader. You can start to see these things coming into play, guys. There's enough concerning global factors right now to where this is really going to lead, I think, equities, the bond market, pretty much most traditional markets out of whack. And we're going to finally start to see a correction as the fundamentals are coming to roost. It's getting me genuinely concerned about the market right now. Then again, I'm not overexposed. I'm really not exposed in equities right now, so I feel quite comfortable. But this is going to be the macro kind of environment that's going to fuel hedges like Bitcoin and gold and silver. You take a look at gold over the last few hours. You don't believe me? Take a look at this. Gold pushing up to $1,500 an ounce. We have not seen these levels since back here in April of 2013, right before the real correction started. A complete 180 from that sell-off right here. Take a look at silver. $17 an ounce. Guys, we're in the cycle. Silver started. I'm happy to see this happening because it's proving that we're finally factoring in the fundamentals. The fundamentals come to roost eventually when it comes to markets. You know, it doesn't make me happy in the sense that this means we're likely going into recession, but it does tell me that at least we know that we're going to finally see these systems come into play. These mistakes by central banks, by governments, finally are coming to materialize, and we're going to get the reset that we need, that we didn't get in 2008. So, anyways, important stuff, guys. Hope you all found the video important, and I hope you feel with me as well with those who have been affected by these things. I think it's, people don't realize economic crashes, currency crises, it's a killer. It's a silent killer. And that's why it's so important to have sound monetary policy and to not opt in for short-term growth, or to opt into building asset bubbles, or to opt in to leaning towards wealth divergences that destroy the middle class and a sound economy. I don't know. Anyways, a little bit of a rant. Hope you guys have a great day wherever you are, and I will see you all in the next video. Stay tuned.